Hello and welcome to the QCS 360 podcast. I'm Nicole Reisdorfer, Senior Manager of Marketing at QCS Purchasing Cooperative, and I'm your host for today's episode. We're excited to have QCS Category Leader Matthew Bossier to give us an overview of the QCS Risk Management Program. Good afternoon, Matt, and thank you for joining me today.
Hey, Nicole. Thanks for having me.
Can you tell us a little bit about yourself and your background in risk management?
Yeah, no problem. Thanks a bunch. So, Nicole, I've been with BevCap Management about 8 years now. BevCap always throws our members off. They think it has something to do with a bottle cap. But that's not the case. I've been a partner here for 8 years. I lead our food and beverage manufacturing practice. I was raised in the insurance business. I started about a year after Hurricane Katrina down in Metairie, spent a lot of time in claims, a lot of time in underwriting, and moved over to the brokerage and risk consulting side some time ago. Those stops at the traditional carrier involved, underwriting large national account manufacturing companies. And I came over here to BevCap 8 years ago to lead the Sharefield program, which was, of course, started for the benefit of QCS purchasing members.
Awesome. Risk management is a very broad topic. Can you narrow this down a bit and tell us the specific areas where you can help QCS members manage their risk?
Yeah, absolutely. When you think about BevCap, it really is a start to finish risk consulting and insurance brokerage. We work on everything from design and placement of the insurance program to design, implementation, and management of your employee benefits. So when you think about risk management for a manufacturing company, distributor, wholesaler, whatever it might be, you've really got a couple core responsibilities. It's one, protecting your people, and then two, protecting the public that you serve, right? So we come right alongside of our clients and help them from the front end of safety to the back end of insurance placement from start to finish.
Oh, that's great to know. Thank you. What specific solutions could you provide?
Yeah, the boring part of our job is insurance placement, right? Everybody needs insurance, workers' comp, general products liability, all that type of stuff. What sets BevCap apart is that we serve a couple of select verticals, food and beverage being one of them. And a couple of solutions we have for that program. One is the Sharefield captive program. So when you think about your workers' comp, your general liability and product liability, if you've got a fleet, how much you spend on insurance every single year for those programs, this level of service that you get from the insurance carrier on those programs, it's very kind of take it or leave it, here's the price. Well, what Sharefield does is allows you to get on the other side of that insurance transaction. All of the consulting, all of the safety resources, all of the insurance policies are specifically designed for our members with our members in mind. And any profits that the company realizes goes back to the members in form of dividends. So you actually tangibly control your own insurance company. You're not really at the mercy of the insurance market anymore. The other solution that's a great one is our Beyond Health program. So employee benefits is incredibly frustrating. It doesn't take much to look at medical cost inflation and just how much this usually goes up for folks every single year to realize it is a massive balance sheet hit for most people to have to deal with this over and over a year. You can't do a budget appropriately because of how out of control employee benefits costs are. So Beyond Health takes a similar approach to Sharefield. In fact, you're in the fact that you're sharing a little bit of risk with like-minded employers. But the focus of that program, first and foremost, is to provide a better experience to the employee. When we started doing this back in 2012, we said, we'll get into the employee benefits business, but we're going to do it in a way that's actually better for the employee. Yes, we'll save some money, but it has to be better for the employee. So really cool things like free surgeries, free telemedicine, free complex imaging. We have a great maternity care program. All of this that is completely free to the employee if they use select pre-approved providers. Big, broad national network can still get great care from, just about any doctor in the country, but it's really designed to provide a better experience. And by doing some of those things, we save the employers a lot of money.
Wow, that's great. One big advantage you provide to QCS members is that you specialize in the food and beverage industry. Is there a certain type of company that can benefit the most from participating in your captive insurance program or other solutions?
Yeah, you bet. For blocking and tackling insurance placement services, we can help just about everybody. That's not something you have to have a certain amount of employees or revenue to realize some benefits from that. But when you start thinking about the captive programs like Sharefield, that's workers' comp, general liability, products liability, and fleet, you're usually thinking probably about 100 plus employees. You're going to want to have a decent sized fleet if you don't have that 100 plus employees, and probably about 10 million in sales and up. If you're hitting one or any of those, you may be a fit for Sharefield on that side. When we think about the healthcare side, it's really 50 plus employees on the plan to be part of that Beyond Health program, and you're usually looking at some kind of self-funded arrangement. So unfortunately, there's not a lot of differentiation from broker to broker in the small space on the healthcare side, so you really kind of have to have 50 and up for it to make a difference.
Okay, well, that's good to know. Do you have any examples of how you have helped QCS members?
Yeah, and that's really the most fun part of what we do is being able to see the hard work that you do on the front end pay off. We picked up a member that joined the Sharefield program about 5 years ago now. And when they came to us, they were tired of the same old insurance game, right? It was a small increase every year, every now and then a big increase, almost no claims, not really any advice being given whatsoever on how to improve their organization as a whole. It was just buy the insurance product, renew, 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 right? So we came in, started providing our consulting services, everything from evaluating their building values and their business income insurance coverage, the amount of umbrella they were buying, the safety inside the plants. We started talking to them about all these things, and what we were able to do for them is to paint a picture of their risk profile that was very appealing to the general market. So some of their insurance stayed in the traditional market, like the property and umbrella and things like that, and the rest of it went into Sharefield. In between Sharefield and the traditional market savings we were able to deliver, it was over $1 million in just the first 4 years. So you're looking at $250,000 in savings per year within 4 years. And that doesn't even count what we were able to do for them on their employee benefits program. That thing's typically running 10 to 15% less than with the expected cost on a yearly basis. So, that's one example just for one company. On the back end of things, as much as you consult, as much as you provide people resources, every now and then a really bad thing is going to happen. We had the unfortunate situation of having one of our members have a really, really bad auto accident. Multiple injuries, multiple vehicles involved, just a really terrible situation. Through our claims consultant, Kurt, who we're super proud of, we were able to get that entire accident locked down from an attorney-client privilege perspective within 3 hours of being notified. So we had counsel, we had the adjusters, we had the insurance carrier all involved, all of the correspondence and all the subsequent investigation was privileged. It's still a pretty tough situation, but that outcome could have been a lot different had we not been able to get involved so quickly. So we're here for our folks on the front end and on the back end, and we think that makes a big difference.
Absolutely. That's great to know. I mean, unfortunately, those accidents do happen. You have to be prepared for those. But on the other hand, it's good to know that you can save our members some money.
Yeah, absolutely.
Is there anything on the horizon of the industry or state of captive insurance or risk management that our listeners of the podcast should be aware of?
Yeah, I think of the horizon really as two things: is what can you see, right? That's actively where you can see the sun coming up a little bit, right? And then what's beyond that? And I think what everybody's dealing with right now is a really hard market from an insurance pricing perspective. So when you think about our economy and everything, the price is going up. It's not different in insurance right now. Umbrella, cyber, property, directors and officers, employment practices liability, all of those lines of coverage are increasing in cost in almost lockstep. The options, the amount of different insurance carriers that are willing to provide proposals on those things are just getting smaller and smaller and smaller. So when your submission goes out, it really has to look different. You have to have invested in the front end. And that's where I think we set ourselves apart from some of our competitors, is helping you be prepared for that marketing exercise by making you best in class. The other thing we're seeing right now is just medical cost inflation, whether it's impacting workers' compensation or employee benefits. Medical costs are just skyrocketing well beyond the rate of inflation. So that's putting cost pressure on everything. Next up, really, we think is going to be a legitimate recession. A lot of economic indicators are pointing to that. We expect that recession to mean less investment income for insurance companies' investment portfolios, which is going to put more pressure on rates and increase cost even further. So really right now is an ideal time to look at doing something different. It's, that old phrase, you can't keep doing the same old thing and expect different results. The folks that aren't willing to try to do something different now, we really believe are going to be wishing they had in 12 to 24 months.
Good to know. Thank you. You can contact Matt Bossier at Risk Management Program by emailing QCS at info@qcspurchasing.com. And a big congratulations to Matt and Sharefield Captive for winning the QCS 2022 Outstanding Marketing Award for a Supply Partner. Your dedication to QCS members is well recognized and appreciated.
Thanks a bunch, Nicole. We really appreciate that honor. A lot of hand-wringing went over kind of the rebrand of QCS Insurance Company to Sharefield, and we want to stay true to our roots and absolutely first and foremost priority of providing an amazing program to QCS Purchasing Cooperative members. We want it to look like what QCS Purchasing Cooperative is all about, and that's value add for the member, savings, and an excellent experience. So we're super proud of the rebrand and very much still mindful about doing the right thing for our Sharefield members whenever possible.
I would like to thank Matt Bossier for giving his insights into the risk management program, and thank you to our listeners. Make sure to tune into future QCS podcasts for additional updates on QCS programs and services. Thanks.
Thank you.